I think it's the first time I've seen so many institutions.
Yeah,
Is that net positive? Is that good? Are we happy about this?
I think it's net positive. I mean, if you think about the pools of capital and what's possible, it's in TradFi, and so the sooner we can build the bridge and bring TradFi money in and understanding in, the better for the entire ecosystem.
I think so too. I think on the flip side of the argument is a lot of the people that entered the space for ideological reasons, to a certain extent myself included, people that were originally in it for the tech, values of decentralization, disintermediation, etc., think that the sort of marriage of TradFi and DeFi necessarily comes at a significant cost, that trade-off is maybe net negative for us. But I think looking around, we're about to talk to $1.6 trillion asset manager Franklin Templeton. There's a $5 trillion asset manager in the building. It's obviously not coming at a significant cost, and maybe you agree with that.
Yeah, and I think kind of zooming out, right? We all see in the crypto space the potential of this technology. And so to me, it's like, we want to make sure that everyone who's going to benefit from this technology can. And so I think it will end up being the back end of the majority of the traditional financial system, but that doesn't mean that the people who came into this space for the decentralization aspects of it can't still have that as well, and still can't have that benefit of being peer-to-peer without those intermediaries. I think that can still exist. I just think really zooming out, we just want to make sure that technology also benefits those who want to stay in the traditional system, which is the majority of humanity, frankly.
I absolutely agree with you. And just sort of looking behind us there, the ADGM is on the main stage. We've got the Abu Dhabi regulators here. And I think that's arguably the sort of gel that's allowed this smooth transition, this marriage of TradFi and DeFi is clever, custom built, specialized regulation in places like the UAE. You're based in the US, I believe.
Based in the US, Galaxy's global. We've offices in Hong Kong and in London as well. But to me, when I think of the regulatory clarity that we've seen in the past few years has really been materially different from the previous cycles. It's one of the three main trends we've seen this cycle that's different. So we have the regulatory clarity, so people know the rules of the road. We have the technological maturity, and I think Solana is a perfect example of that with their uptime and with the demonstrated advancements that the ecosystem has made. And then finally, the interest that TradFi has brought into the space means you put those three things together, and it's just a recipe for a level of adoption that we haven't seen in previous cycles.
That's well said. I love hearing that.
Right, very eloquently argued, and I think a lot of people agree with it. It's just I can't help but get over the concerns that people raise when we talk about how big Solana has got. This is Etihad Arena. We're in the capital, right? We're not in Lisbon anymore. This isn't Amsterdam. This is not like a small town.
We're in half the arena. Next year we'll be in the full arena.
The full arena. There we go. Or maybe in New York, in Madison Square Garden, or something like.
Or both.
Or both. Absolutely in immense scale to think about it, and I think it's amazing. You guys, I saw your logo was on stage just a few minutes ago as well. During Austin Federa 00 founders presentation. What was going on there? You was talking about some of your infrastructure, I believe.
Yeah. So Galaxy, as you know, it's a crypto-focused investment bank. So we have the same structure as a traditional boutique investment bank, but that also means because we're in crypto, we have a deep tech stack as well that covers a lot of different parts of the crypto ecosystem that Galaxy has really grown up and helped mature. And as part of that, it's supporting companies like Austin's to make sure that when he has an idea like that is transformative and is a better way to use those networks that already exist today to better move and store information and value, that Galaxy's there to not only help support that dream, but build it both financially and from an ecosystem perspective.
Do you talk to a lot of TradFi folks in New York? I mean, when I think about finance in New York, it's like Wall Street, all these guys. So you're in a very
those guys in jackets.
Yeah, I know. You got jeans on, you're fine. But when you talk to these traditional, more sophisticated investors, I guess with a much lower risk tolerance, maybe a longer investment horizon, what are the key points that you focus on when it comes to, I guess, dealing with some of the question marks that they have about ecosystems like Solana, aside from question marks that people have about crypto as an industry, now that we have regulatory clarity, you touched on that earlier, Solana specific objections, question marks, how do you deal with these things?
Yeah, so still for the majority of people, Solana isn't a household name. To us, we hear Solana all the time, we see it on Twitter all the time because it's the little world we live in. But step one is really education and stepping back with these large institutions and saying, look, I lead tokenization at Galaxy. So a lot of that education with large TradFi players, step one is to say, look, tokenization and crypto native assets can be separated. crypto native assets you can think of as Solana, as Ethereum, as Bitcoin. But tokenization is really taking real world assets that TradFi knows well and putting them on chain to not upend the financial system, but to upgrade it. And having that conversation with them is really the first of a long process to go from, okay, let's, teach them about this technology, teach them about what it has the potential to do, and then help them build out a strategy to do so. And then finally provide them with the products and the resources that they're looking for based on the timeline that they have to be able to build out that transition. Because by the end, they recognize, hey, the majority of the back end of their system is likely going to be on chain. That's not something that happens in a year or two. That's something that happens in decades.
Yeah.
And so the question is how they go from where they are today to that, the long-term goal there. And that progression is going to be likely an S-curve, where we have the regulatory clarity, we have the tech maturity, we have the interest, and it's going to just happen pretty quickly once you hit that adoption rate. And I think we're getting pretty close.
When you talk to these, TradFi folks about that S-curve, is it a value proposition framing, or is it like, this is going to happen whether you like it or not? So, hold on to your pants because this is happening.
Yeah, so I would say the fun part about the space is because it changes so much. I've only been in Galaxy for 2.5 years. Was it Ripple and Paxos previously?
25 years in crypto time.
literally. But even a year and a half ago, it would be us at Galaxy going to the TradFi players and saying, hey, this technology is faster, better, cheaper. You should really check it out. It can really help you guys, boost the offerings you have for your clients. Now the conversation is flipped. They're coming to us. They're coming to the other leaders in the space and saying, hey, we see this writing on the wall. How can we jump in and really make sure that we make this transition ahead of our competitors?
So they have FOMO now.
So they have FOMO, and they recognize that this technology can help them, boost a lot of the revenues that they need and cut costs that they want on the back end. And that combination is super attractive for them.
And let's say one of these TradFi institutions, however you think of them, come to you, right?
Yeah.
As opposed to a few years ago where you felt the need to go to them and sort of try and explain, and education being the first step there. What's the core tenet of tokenization that you find most beneficial in that conversation?
Yeah, so I think to people who don't live and breathe crypto,
right,
the easiest way I explain it is tokenization just takes the information associated with value and the value and puts it together. Today, when you're a trader on Wall Street, you look at everything through your Bloomberg screen, but all the assets that you're trading are in some custodian that are being moved around when you execute your trade after it settles, right? What tokenization does is it takes that value and the information you see on screen and puts it together. So wherever the value goes, the information goes. That simple. Essentially, another example we use is when you swipe your credit card today, the information is instant, but the settlement is until a few days later. All it does is now when you swipe your financial version of a credit card, just puts them together, so it happens instantly.
Interesting. I guess a few years ago, if you explained that to someone, they would have said that's magic. That's not true. We don't trust it. There's no regulation. There's no clarity.
Yeah.
And now people are much easier to go from your explanation to accepting that as gospel.
Yeah. I mean, I don't want to say it's a rosy picture and everyone's like, okay, let's do it.
Right. Yeah.
It still is. It takes a long time. But I think, the regulatory conversation is just completely different. The fact that Genius was bipartisan, and that the conversation is just, it opens with more of a how instead of a why.
Okay.
But to your question earlier about what real benefits we talked through,
Yep.
One example that most people get is you see stablecoins. It's just a more efficient way to move dollars overseas. It's a more efficient way to get people in emerging economies access to the dollar.
Absolutely.
And it's a more efficient way to trade Bitcoin, Ethereum, and other digitally native assets, right? So those three use cases very clearly have product market fit. And you can take that same asset class and say, okay, it worked for dollars when you want to move value. When you want to store value, we're now increasingly seeing people being willing to buy tokenized money market funds like the one that we announced with State Street today.
This is big news, and I want to touch on this. Don't worry, that's the $5 trillion news that we have to dig into it. So if you don't mind me cutting you off here,
go for it.
The next conversation we're going to have is with Mike Reed from Franklin Templeton. Now, 1.6
wonderful.
Amazing group of individuals, $1.6 trillion asset manager.
Yeah.
This morning, when we came into this booth of ours, it's quite warm now, we were under the impression that was going to be, in terms of sheer numerical value, the largest asset manager that we'll be talking about.
Yep.
Fast forward to today, you guys came out with some amazing news. I think it's a partnership with
State Street.
With State Street, and correct me if I'm wrong, I think their AUM is just over $5 trillion. Is that correct?
It is, yeah.
Talk me through that partnership, the announcement, please.
Absolutely, and so that's an example of partnership that we've had for quite a while at this point in crypto time. And in many ways, it's a classic example of a traditional financial player coming to us and saying, look, we see the writing on the wall. We think this is the thing. Help us think through from a strategic point of view. Help us think through what our product roadmap looks like. And then help us think through where we start and how we can implement that. And that's where Galaxy is uniquely positioned, because we're able to go through that entire journey with them and act as an advisor and a consultant in the beginning, but then also help design the product. And then once we decide the product, we can then go into the ecosystem, find the right custodian, find the right market maker, find the right transfer agent, find the right tokenization agent, find all the puzzle pieces that you have to assemble to create that on-chain product and bring them up the education curve in one cohesive package. And so that's one thing that we've seen that has worked really, really well with State Street, and we're excited to be able to, have Sweep debut quite soon. And the big takeaway with that product is, hey, we should never have idle cash. Whenever you have idle cash, it should be swept into a product that is paying you the risk-free rate. Then the second that you want to use that thing, it can be flipped into a means of payment that can then, move to whatever wallet you're looking to pay.
Bit of a cheeky question. Why did they pick you to partner with? What do you bring to the table that, some of these other companies out there that are more crypto native, that have been around just as long, didn't offer them?
Yeah, of course. Galaxy's been around for a while. We're one of the bigger players in crypto specifically. But because most of the people from Galaxy kind of grew up in TradFi, it means that we have the DNA of TradFi, but the expertise of crypto.
Okay.
So we're
that language.
Exactly. We're comfortable talking to those on Wall Street, and we're also comfortable at a conference like this, really talking, going deep on how blockchain really.
And you can wear shorts next time, and then we're all Bob's your uncle. Sorry.
Exactly.
You guys also tokenize your own stock as well, on like directly on Solana. So you guys are like walking the walk as well. So that's in my mind, when he asked that question, he's like, why did they choose you? It's like, well, look at our stock. Look what we did. We went through this process already. Check it out.
Yeah,
Right?
and to that end, we worked with one of our portfolio companies, Superstate, to do the actual tokenization.
Yeah.
And while, I've been at Galaxy for a while now, and we really wanted to, tokenize our stock for a long time.
Yeah.
And we waited until we were able to work directly with regulators and go down to DC and say, look, we recognize that to tokenize this and tokenize it correctly, we think that we're uniquely positioned to do so because of our, to what we were discussing earlier, we are right at that intersection. We understand the technology cold, and we also know how the traditional financial system works. And so if we're going to tokenize an equity that's already traded on the NASDAQ, we need to make sure that we understand both worlds, and then we put them together. They don't just work, they complement each other.
Yeah.
And that's kind of the first step that we had when we tokenized our stock with Superstate is, hey, we want to demonstrate to regulators and others in the market that this is how we think we should do it, A. But B, once we've proven that, we can then use it in a different way and really unlock what the potential is once you have that equity on chain.
Yeah, so awesome. Now, when we talk about $5 trillion,
It's a lot.
that's a lot of money. How much of that is going to be coming on chain?
I mean, of course, I might be a little biased.
Yeah.
I think it's all going to end up on chain. The question is how, right? And when, and what that adoption curve looks like. And I think in the last cycle, a lot of the time we talked about, that tokenization unlocks liquidity. People wanted to tokenize real estate and other illiquid assets, and that, when you spin up an SPV and issue tokens against it, all of a sudden you create liquidity.
Yeah.
In reality, the product market fit for tokenization today has been the two most liquid products on the planet, the US dollar and the treasury market.
Yeah.
Right. So when we look at what that S curve will look like for, the next wave of adoption, it's likely going to show what that next wave is. From a liquidity perspective, and we'll get there in different pockets of the market. We'll definitely evolve at different places, but I would really zoom in on where is the problem the most, and where are people going to be willing to maybe think about a new technology or go a little bit farther out on the risk curve to achieve that pain point and get rid of it to have the efficiency and benefits that they're looking for.
Yeah.
So you mentioned Superstate there. I'm sure working with people like Robert Leshner, who have been in the industry since day one, arguably, both on the sort of builder shipping side and on the DeFi side of it. All these OGs, I'm sure, very, very beneficial. I have a question for you about PYUSD.
Yeah.
So you're partnering with DeFi OGs. You're also partnering with TradFi OGs like PayPal. How does that all glue together? Are you guys really, as Galaxy, the glue that makes it all work, and why PYUSD specifically?
Yeah, I mean, at the end of the day, if you zoom out, much of the financial system is based, sure, on technology, but also it's based on trust.
Right.
You keep your money at a bank because you trust the bank. This industry, maybe not trust banks, but at a high level,
there's enough trust me bros around here.
Yeah, exactly. But at a high level, it's based on trust.
Right.
And so we choose to partner with people who kind of recognize both of those worlds. And I think we've seen that with PayPal and PYUSD, and they've really demonstrated that, hey, you can use the leverage of a large brand like PayPal and the technology and the distribution that you get from the technology and marry them in a way that really brings the two worlds together. And I think we're going to see that increasingly where the technology will get you so far, but this next wave is going to be when the big established brands come in and adopt the technology.
DATs. So another one is, intersection of DeFi.
I knew we were going to get to DATs.
Of course we're going to get to DATs. I mean,
it's
unavoidable. And I think it's unavoidable in this context for one clear reason. $1.65 billion is a serious pipe. Forward Industries, Multicoin, Kyle Samani, these names have an echo in the Solana ecosystem. We have to talk about it. Congratulations, first of all, for being part of that as Galaxy. I know Mike Antonio, who you work with, was a big part of that deal as well. Now, the last time we spoke to Michael, he explained that one of the key reasons why Solana DATs and Forward Industries specifically is, in a sense, a more optimized version of the financial alchemy that we see employed by Michael Saylor's strategy, is because simply by virtue of staking the vast amount of SOL that is held by this vehicle, the vehicle stands to earn about $100 million a year in staking euros. Now, that's absolutely massive.
Yeah.
But there's another side of the discussion, which is that to a certain extent, and I think Forward Industries might be largely excluded from this because of the configuration, that the digital asset treasuries as a whole cumulatively pose some systemic risk to the Solana ecosystem. Talk me through how you reconcile that discussion.
Yeah. I mean, I think that's the fun part about crypto, right? Is because no one knows what will happen, and that's why we're all in the space. You can make predictions as much as you want, but at the end of the day, we're just going to have to kind of see.
Yeah.
And DATs are a perfect example of a financial innovation that have, transformed the way that people think about traditional finance and the way you think about crypto. And you put those two together in a novel system that kind of takes the best of both, and we're just beginning to see what's possible. And I think for Solana specific DATs, of course, as you mentioned, as Michael Marcantonio will tell you at length, is Solana specifically has a lot of utility beyond the asset itself by definition. And Bitcoin DATs, Bitcoin that's it. It's Bitcoin, and that's wonderful and far and away the biggest part of the ecosystem. But the thing about Solana or other assets that have more productivity and availability means that you can use it in different ways, and that DATs can leverage that asset in different ways that an ETF that might be filled with Solana might not be able to have as many levers at their disposal.
And let's tie that back into the systemic risk discussion. To what extent do you think, if let's say in a scenario, again, we don't know, to your point, what's going to happen, but you're 6 months down the line, 12 months down the line, 18 months down the line, impossible to predict what's going to happen. But let's say the price for Solana continues to depreciate. Some of these DATs that are in size much smaller than Forward Industries end up needing to liquidate their positions, sell some of their SOL. That applies downwards price pressure. MNAVs get compressed even further, creates a bit of a death spiral. That's the prediction. Is this a logical fallacy? Do you think there are ways out of that crisis, or is it necessarily a death spiral?
So there's a lot there. I think there are a lot of directions it could go. One thing that I think I'll be interested to see is from an M&A perspective. When you see some of the larger DATs, they can go on offense and they can actually purchase a large amount of Solana at a discount if you're trading under MNAV. And so from that perspective, we're going to see a lot of the big leading firms likely begin to do just that. I don't know, and the market, that's what makes the market fun. But I think that's a trend that I would expect to see in the short to medium term if this trend continues.
Would we think of that retrospectively? Let's say it's the end of 2026 and this happens. Would we think of that as a shakeout or a consolidation, or what's the language that we might use about thinking about these mergers and acquisitions that are likely to happen? One swallows the other. Big fish, small fish. Is that the language that we're going to use?
It could be. You could take a negative connotation. You could take a positive connotation, right? Of, hey, if we're all in this together and we're all separate, we're much better positioned to be able to represent what a DAT can be if we're all together, right? That would be the positive view of saying, hey, let's bring everyone together, recognize their inefficiencies and scale here, and then figure out how a bigger, a bigger company might be better positioned to weather the decrease in a specific underlying price. The negative side is, hey, price is going down. All these companies are likely in a hard spot, and so the market's going to do what the market does and be able to take advantage of that.
I think that's the most realistic outcome, right? Is if the price goes down, we're going to have very negative language. If the price goes up, we're going to say, hey, look, that was a good consolidation, and like we're all moving in the right direction.
Something tells me you've been in crypto before.
It's not my first rodeo. Yeah, no, but okay, let's think about 2026 again. I think for most of 2025, we've spoken about TradFi coming on chain, institutional adoption being net positive. 2024 was arguably the year of retail adoption and the chain really being stress tested. Fast forward to 2026, what is 2026 going to be the year of when we think about Solana?
Oh, when you think about Solana, I mean, in many ways, Solana is representative of different parts of the crypto ecosystem more broadly. I think, the narrative this year that Solana is really focused on is internet capital markets and becoming one of the key go-to chains for TradFi when they make that shift. And I think just based on the conversations we're having in TradFi more broadly about the technology, not only is Solana and the other, key blockchains in the conversation a lot, but the adoption curve is no longer dependent on the underlying price. It is looked at as the utility of what it can unlock for traditional financial assets. And that is something that's different than in previous years. And the other side is it's very clear from an investment horizon and from a, strategic perspective, they're not focused on launching one fund or one product. They're focused on what that fund represents for all of their other funds and how they can use this from a marketing perspective and an investment perspective to say, hey, this was the flagship thing we did initially. This went very, very well. Now let's replicate and duplicate that across our entire stack so we can wake up a decade from now and be that much leaner, that much more efficient, and able to reach such a broader, diverse audience and investor class.
Very interesting. I want to leave on. I could have this conversation all day. By the way, it fascinates me to think about the what ifs and the what abouts of the next 12 months. Let's leave on a bullish note. What is the single most exciting thing for you when you think about 2026, Solana specifically? What really excites you? What makes you think, okay, I want to pursue partnerships in this domain, or I want to follow along with Double Zero's developments because they're building purpose-built decentralized infrastructure. What really gets you out of bed and excited?
Yeah, I mean, one thing about this industry is at the end of the day, we're all tech nerds, right? Like that's just who we are. But we're all brought together by conferences like this, and it comes down to the developer community and the group of people who have dedicated a large part of their life to building out, this blockchain specifically. And it's conferences like this when you recognize that and you see that, and it kind of highlights, oh wow, all these people are come together. They're all motivated to, make this vision that we've all had a reality. And the question is how and who is going to do what to achieve whatever end they're looking for. And there are so many people on the stage behind us who have demonstrated that today, and I'm very excited to kind of follow their journey and see in the coming years how much progress we all make as we make this transition from TradFi to crypto. Despite, there will be highs and lows, as there always is. But I think the direction of travel is in one direction.
Okay. Final question then. You mentioned there's loads of people on stage. It makes my life very difficult. Everyone's on stage for 5 minutes, too much information. But are we really in a bull run still, or are we in a bear cycle? What's going on here?
I told you I can't make predictions.
I know, but we have to ask it. Are we still in a bull run? I think it's a reasonable question based on price action.
Yeah. I mean, in my little tokenization vertical, it's a bull run for tokenization because that, to me, that ship left, like that's gone. That's going to happen regardless. It's independent of price. But if you think about Solana or Bitcoin or Ethereum, whatever the prices of these digitally native assets, I think you can make an argument on both sides, and that's kind of where the opportunity is. If everyone were in one direction, then you'd know. But because there's still a little bit of question there, it means there's opportunity, and people can really see a trend, double down, and really benefit from that in the long term.
Unfortunately, Thomas, that is all the time we have today. We could again have this conversation all day. Ladies and gentlemen, Thomas, head of tokenization at Galaxy. Thank you so much for your time.
Of course. Thank you so much.